What do you look for in a company before investing?
We have a buy and hold investment strategy actually. Our churn ratios are very, very low. Typically, when we buy a company, we would like to hold it for a long period of time. So, we prefer to buy scalable businesses. We prefer to buy structural compounding stories which you can hold on for long periods of time and then in that period generate multi-bagger returns. So, scalable business which is a great vision, great promoters, good management behind it, and strong cash flows. I think that's the basic thing. And when you buy such a company, you really don't want to sell it ever. But yeah, we make mistakes, and yeah, the environment changes too. So we revisit our hypothesis at regular intervals about what we initially thought about what the company could execute, and we do. And if it holds, we hold.
What is your market outlook for FY21?
I think if we have to describe it in one word, it's disruption. We see disruption of all kinds from the regulatory side, business, environment side, even competitive and competitive environment driven. So disruption is actually good because it brings out efficiency, and efficiency is great for investor returns. But it is very difficult to on a portfolio level to take benefit of disruptions in the short run. For example, transportation improves, cost of logistics is going to go down, right? But in a short period of time to measure it accurately is very difficult. So market will tend to overestimate the impact of disruption or underestimate the impact of disruption, which will lead to wild volatility. But in the long run, it comes through. So execution of the disruption part is a little difficult. From our perspective, we clearly see that we stick to in the current environment. We are very positive on the Indian economy, especially the fact that Indian economy presents a compelling opportunity to become the consumption capital of the world. Investment cycle which is down right now, that will turn, but to predict accurately when it will turn is a little hazardous. So in the current environment, we stick to companies with strong parentage, strong cash flows, high quality earnings. So we clearly see a trend in the market right now where strong companies are pulling ahead of the rest, and marginal companies are actually finding profitability and survival quite difficult. In a small way, if you actually see the stark difference in the performance of various stocks in the large cap indices, it probably presents you a possibility of the same happening right now on the ground.
According to you, which are the sectors that one should pick and which are the sectors one should avoid?
See, actually this question is really not important to us from our perspective because we are sector agnostic. We, as you would have understood, we focus on businesses, right? So sectors really doesn't matter. We buy companies which have leadership capabilities, which can be generating strong cash flows over a period of time. That said, we are happy to look for sunrise businesses which can generate jobs, which can generate huge business and investor wealth, sunrise businesses. But what we really avoid are companies or sectors where there's continuous need of capex, there's a regulatory overhang, there's corporate governance issues, and we also don't bet on turnaround stories. That's we prefer to bet on not the possibility of success but actual success.
What has been your biggest investment learning?
Biggest investment learning would be return of capital is more important than return on capital rather. Cut the noise, focus on the fundamentals, and wait patiently for the market to do its bit. And lastly, not everything that we hear is a fact, and not everything that we see is the truth.
What are your key success factors?
It's discipline actually, minimizing mistakes, avoiding distractions, and resisting the temptation to take short-term bets.
Which are the sectors that you're currently bullish on?
As I said, we are sector agnostic. We really don't want to get into, it's not as if for our portfolio building, we don't look at the underlying benchmark or the sector breakups, etc. But it's the basic business which excites us. So if I name a particular sector, it doesn't mean that all the companies in the sector will behave similarly. Which is why I was alluding to the point that if you actually see the breakup of way the stocks have performed in the Nifty last year, you know, say for example, a private bank sector, you know, forget banks, just private bank, there'll be so much variation in what one stock has done and what other stock has done. So I think we feel that in the current era, the way the economy is, it's very important to be more stock specific rather than be sector specific.
Who are the fund managers that you admire?
See, I still consider myself as a student, so yeah, I'm learning all the time, either from history or from books or from my own mistakes, others' mistakes. I really admire Charlie Munger, you know, who is probably one of the best person who has a very elemental long-term wisdom-driven long-term investment philosophy. You know, anybody who reads him long enough can follow him. And I also admire Prem Vatsa, actually, who is also known as Canada's Warren Buffett. I admire his incredible humility.